Is focusing only on returns a good approach to investing? Financial expert Mr. Ramalingam will share his insights with you now.
Market has conditioned most of the investors to over focus on returns part. So what is the challenge? Why we have been programmed that way? Let us think about it in detail. I go to a bank. My office is in Chennai TTK Road, which is a stretch of 2.5 kilometers. So what happens there is a bank. Outside of the bank, they have given a board. Like for a 3-year FD, our bank gives the highest rate of return among all other banks. Nice. 500 meters from there, on the opposite side, there is another bank which claims for a 3-year and 1-day FD, we are giving the highest rate of. Then you see the corporate fixed deposits like Tamil Nadu Power Finance or debentures, NCDs. They claim we are giving higher rate of return than bank deposits. Mutual funds, if you take it, they tell you, okay, there are totally 35 large cap funds. Out of all 35 large cap funds, our fund has given you high rate of return. In the last 1 year, we have given the best rate of return. Why don't you invest in our fund? Because our fund has given the highest rate of return. Yes, great. Another mutual fund company will advertise, no, in the last 6 months, our mutual fund scheme has given the best rate of return. Large cap fund. We have outbeaten the fund which has given the best return the last 1 year, the last 6 months. So you have to logically invest in our business mutual. When it comes to stock market, I need not tell you, right? Like they know, okay, this particular stock is available at 200. You buy, keep it for 3 weeks, you will touch 300. You can sell. The entire game of thing can be FD, it can be mutual funds, it can be stocks. The entire game of thing. What is actually focused is return. What goes completely unnoticed is the risk. I would put it this way, in order to make us go out of focus in the area of risk, people make us over focus in the area of return. Most of the investors today are educated and people know about ULIP, endowment, money back. They all know very well that ULIP or endowment money back policies are going to benefit only the insurance agent or the bank relationship manager who is selling that. It is not going to benefit an investor. It is going to meet only the target of the agent. It's not going to help the target of the investor. They know that by and large, but every day thousands of policies are sold every day in India. How come that is? Because an agent or a bank relationship manager prepares a big chart. Okay, you are investing 1 lakh every year, investing for 20 years. At the end of 20th year, what is going to happen? This is what they will tell you. Even at 4% compounding rate of return, it will look like a huge thing. Wow, I have got this much return. If I continue this policy, if I enter into this policy, I'll get this much return at the end of 15th year, 20th year. So let me buy. In the same investment proposal, if you look at it, for the first year 1 lakh paid, the value will be 0. Second year 1 lakh paid, again the value will be 0. Third year put together, he has paid 3 lakhs. The value will be 1 lakh. End of 4th year, the value will be only 2.5 lakhs. Only after 7 years do we break even. We will never ask this question to the agent. Why in the first 5 years, like even I don't have my principal? What happened to my principal? Because our mind is diverted. They made us over focus on the return part. So commonsensically, we should not focus on the return part. But they program our mind to focus on the return part. That is why we go out of focus in the area of risk. That is why, like even thousands of policies are sold, but after 2-3 years, they realize slowly they come out of it. Yes, paid this, it's not giving me good return. Whereas I have invested in a simple FD, I have invested in a mutual fund SIP. It is giving me higher return than this ULIP. That means this guy has cheated. They missold some product to me. Though they know it is from a reliable, credible bank or a relative, they have missold some product to me because of their target. We will realize that later. We take a decision and regret for it later because our system one thinking was dominant. We are carried away by the return. System one thinking wants instant gratification, right? So we are carried away by that logical calculation. System two thinking we are not able to apply. What is the risk involved in it? How can they give this much money? Logically, we are not able to work it out in that moment. It needs an effort. System one thinking says, okay, it's kind of lazy. Don't put all this effort and recalculate and see whether is it worth or not. System one thinking is lazy. That is what dominant. That is where the challenge comes into picture. Because of this programming in the investment market, we go to a stockbroker and tell him what is the target price. Target price is basically a return which is uncertain. We don't ask him, okay, this is the rate you are telling today. Okay, will it come down further? Do we have an opportunity to buy this at much lower price with margin of safety? We never ask that question because our mind is not focused on asking system 2 related questions. Our mind is programmed only to ask system 1 related questions. We get carried away with system 1 thing. Let us not do it.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances, then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.